I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast, and it's a different podcast format than everything else out there. I bring together a new and experienced investor on the episodes and let the aspiring investor ask the questions that they need answered to push their business along to the next level. And if you're an aspiring apartment investor yourself, you probably have the same questions. So now, before we get to the next episode, make sure you hit the subscribe button and that little bell below to make sure you get notified every time we post a new episode. And now, enjoy the show.
Karoline, we got Bernie on the line. What do you want to ask him?
For someone that's working a W-2, right? Like, what is the biggest piece of advice that you can give as far as getting into this business and trying to do multifamily investments while also working the W-2?
I think there's a couple, right? I think the first thing you have to realize is that there is no perfect deal. And I think a lot of folks do that. It's that paralysis by analysis routine, right? And they're like, gosh, I'm looking at this deal, but it's only a 4 cap, or God, man, it's everybody has the same thing, that they want a 8 cap at $50,000 a door, that they can put $5,000 a door in rehab and refinance it for $90,000, right? We would all love those, but I also would like to find a unicorn, and that's not going to happen. So I think for your purposes, as your new investors, like, okay, find the deal that you want, be willing to do it. And in a lot of cases too, is don't be selfish about it.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Four Oaks Capital. Very excited for today's show. We have two great people on the line with us today. We got Bernie Leas and Karoline Kaon. And, Bernie, you're coming on as the experienced investor today. So you're up first. Do us a favor. Tell us a little bit about yourself.
Yeah, well, thanks for having me, Brian. Appreciate it. So I'm like a lot of people probably got into real estate. I had a W-2 job and was making good money, and my wife and I sat down a few years ago and we're like, hey, let's get into something else. And was it an online business? Was it real estate? And so we decided that let's try real estate. It's like a lot of people, right? And so a lot of folks like myself, we started on the bigger pockets and looking at that journey, and got to the point where we pulled out a line of credit on our house and we bought 2 single family homes in Indianapolis, Indiana. And we thought we were flying high. Yeah. And then 2 months later, we're like, we're out of money. We couldn't scale anymore. Yeah. And it got to the point, it's like, one vacancy pretty much wiped out like 6 months of profits on a single family. So like a lot of folks, after about a year, Brian, we looked at it and said, like, if we want to scale this and expand it, then we probably need to go into multifamily, right? We're going to have a little bit more of that scalability and use other people's money and kind of invest with partnerships and things like that. And so we started looking into that, and we joined a couple of groups, started networking around, and that kind of led us to where we are right now, where we've got, about 87 units under management and working through to kind of expand our portfolio from here.
Awesome. Now I'm going to, tease a couple areas out here. So what was your W-2, or what is your W-2? Because you're still working the W-2.
I work in e-commerce. I do operations. So I manage our distribution networks in the US and our global customer support teams across the world.
All right. Now, what was it that kind of drove you to look for something else? A lot of people get to that point where they know they want something else. What was the driver for you?
The big one for us is, as a wife and I sat down, it was like, what do we have as a backup down the line to build? Right. And then also is, what do we do for our kids to set them up for something that kind of gives them a legacy to kind of work through that, right? It's not like we're going to hand them a couple of $1 million, Brian, and say, be a trust fund kid. Yeah. It's more about, how do we set them up to say there's something there for you down the line to go into as a business potentially, or to give them at least the leverage to try their own things financially down the line, where they're not kind of beholden to taking out a huge amount of loans and leveraging themselves and things like that. And honestly, selfishly, my wife and I are looking at, do we want to work till we're 70 years old and then finally retire and try to enjoy it? Or do we want to have something down the line that we kind of fall back on and not worry about it? Because at both of our W-2s, we have no equity in the company, right? And that's okay. A lot of folks don't. That's not a bad thing. Yeah, it's just that, 90% of America, we get our raise, but we don't have anything kind of, fall back on us kind of with the exit parachute kind of a deal.
Yeah. And I think a lot of people, like you said, find themselves in the same situation. You're in a W-2, you're doing your best you can, you're getting the pay raise and trying to, climb the corporate ladder, so to speak. But I think we had the same realization, a couple of realizations, is the W-2 isn't going to get us where we want to go. And, I also had, 2 single family homes, and called a lender up and they said, nope, not off of your salary. It was a W-2 salary. I thought I was making pretty good money. And lender's like, Yeah, I think 2 houses is about, as much as you guys can do right now. But and then same thing for me. It was like, how do I scale this? And same answer you came to, but it was multifamily. So let's hit that transition a little bit more. I mean, you have 2 single-family houses. You said you took a home equity line of credit to buy those, which is also very common. Now, when you started in multifamily, how did you bridge the gap between all of our money's gone and raising money from others, which presumably you did?
Yeah, it was a pretty big jump. So we looked at, what experts are out there that kind of get us past that learning curve, right? A lot of folks want to go out and do it on their own, and the learning curve is super steep, Brian, and it takes time, right?
Yeah.
And so for us is, how could we pay potentially to accelerate that and lower the pain through that learning curve process? So that's what we looked at. And we looked at several different groups. We decided we joined one group after talking to them and attending a couple of events. We were pretty impressed with them, talked to their coaches, things like that. That felt pretty good to us overall. I think how we bridged the gap really is we took a big risk is we sold our house.
Wow.
And so we sat down, and so the night we signed the contract with the realtor, about 2 hours later, my wife goes, "I'm pregnant." So, right. It was one of those moments, those oh crap moments, where it's like, did we make the right decision?
Right.
But we kind of struggled through. So that kind of was our seed capital for the initial one. But even then, it was like you, Brian, it's like, okay, we can go out, we can afford a fourplex with this. So it's not like we can scale. But then we just started, looking through and saying, okay, talk to the experts, start to network, and it put us around people who could introduce us to other people who had the same goals that we had, and help us to kind of minimize some of that thrash that a lot of folks have between, deciding to go into multifamily and actually closing their first deal.
Yeah. Wow. That is a big jump right there, selling the house. And, the home equity is a very common first step. Fewer people make that jump of selling their house, but it's a really good way to get that untapped equity that's in the house and be able to make it useful. And so far it looks like it's worked out so far. And just knowing what you know now, would you make the same decision again?
Totally right.
Right.
Yep.
All right. Awesome. So good to know. Now, would your wife make the same decision again?
I think she would probably try to minimize some of the stress that came with it, but I think looking at how it's turned out for us, yeah, she would. I mean, you have to have the money to go into that first deal. You can raise money. Don't get me wrong, you can raise money, but if you're not telling your investors, hey, by the way, I'm putting this big chunk of money in that's probably going to exceed your investment, it's hard to build credibility when you're like, oh, by the way, I have 0 units under ownership as well, too, right? So that for us was a big deal for us, and so we knew we had to pay to play the game. And that was our way to kind of get in and build the credibility as well with folks.
Yeah. And I did something similar in a lot of ways. A lot of ways your story parallels mine. I got into a coaching program, paid quite a bit of money to do that. It was very beneficial, have somebody to help you go through it. But I put $100,000 into our first multifamily deal, which was almost everything we had liquid at the time, besides, retirement fund here and, the single family house that we lived in. We actually had a single family rental at the time too, but, similar to you, it was part of the reason was, to raise money. I felt I had to put my money where my mouth was. I felt that, if I'm going to ask my friends and family to invest, exactly what you said is I've got more money on the line than I'm asking you to put in, $50,000 minimum. I've got 100,000 in. So I'm going to take care of the investment because that's a lot of my money too.
Totally. Yeah, totally agree. For us, my partner, Mike, and I, we found that was a really good selling point because that was like the first question people would ask us.
Yep.
Oh, it sounds like a great deal. How much are you putting in? And we're like, we're putting in 3 times as much as you are. And like, okay, done. Right. And that built credibility so fast for us.
And I've had a lot of people on the podcast, say you use similar strategies, and a lot of it is in the wording, of how you approach people to invest. A couple of conversations that I had with people is they ask you to co-invest, and they start exactly like we said is I'm investing this amount in this deal because I really believe in the deal. I believe in the city. I believe in the operators. We have a couple of partners who are really experienced. So I'm going to put in this much money. Do you want to invest with me? And that seems to get a lot better response than, the alternative, hey, do you want to invest in this opportunity? It's, maybe they do, maybe they don't. But, if you're leading from the front, people are going to follow a lot easier. So
I agree. A lot of our verbiage is around how we talk about being partners with them. We don't talk about like, hey, we're the owners, you're investing in our company, and we're going to manage it, and we're going to pay you dividends. It's more like we're investing this together. We all get the benefits of it, and we're super transparent as well. So I think that's not that it's the best way. It works for the style that we have personally.
Yeah, it works. I think a lot of people are looking for transparency, and once again, it sounds better to prospective investor to be a partner and a co-owner than, hey, do you want to give me $50,000 so I can invest in this property?
Right.
It's more palatable, I guess. So, we talked a little bit about, why you made the move, but I want to go a little deeper on it right now. What I call the big burning why. What's your big, I guess we call it the Bernie why, but for you, but what's your big burning why?
It's for us, it's the family deal, right? And so I think we wanted the ability. So I think a couple of things, right? My wife got pregnant, right, while we were doing this, and it got to the point of like, if she wanted to pull the ripcord on her W-2 and wants to spend full time with our daughter and our son, we want her to have that option, right? That was the number one priority for us. So we wanted to have that option to say, like, we're not going to take a step back in lifestyle. We're not going to worry about how much we're putting away in savings every month. We're going to have this backup plan to do that and allow her to have that opportunity to spend more time with the kids. Because you only get, for us, it's time. You never get the time back, right? Yeah. And if you go back in the day and say, like, what, hey, I worked 30 years and 50 hours a week, I accomplished a lot. Well, if you didn't know your kids, who the hell cares? Yeah. And that's kind of our approach to our life. The second one for us was our kids itself too. We want them both to have the options, right? To sit there and say, like, here's this nest egg for you. And when you're 18, if you want to go to college and blow it on a humanities degree, God bless you. Yeah. Or if you want to start your own business, here's something for you to start that and put you in a position where, versus going out there and leveraging yourself to the hilt where you can't pay off your debt till you're 35, then you start to make a decent living. We wanted to kind of avoid some of that thrash that a lot of folks are going through right now. Yeah.
Yeah. And that's important. I like to say I bootstrapped a lot of things. My parents weren't able to help financially, and I wasn't quite in the position when my oldest daughter got out of college or got out of high school, but we're setting ourselves pretty well to help the younger kids. And I have a smile on my face right now because my oldest daughter is the podcast editor, so she's going to hear that. But sorry, Elena, we'll make it up to you. But anyway, that's it's once again very, very common. I think everybody is motivated by family, especially with the kids. Once the kids come along, a lot of things change. And it's thanks for sharing that with us.
Of course.
Now is a fun part of the podcast. We're going to talk about some of your deals. So tell us about one of the deals that you guys have, and what you like, and what you like about it, and how it's been going.
Of course, I think our first deal is the one that we like kind of go back on, because it just it took Mike and I, or my partner, 2 years for us to find our first deal, right? And then it sounds like a long time, and a lot of people grinding it, but it was an on-market deal. It was public. It was in a small little town about 70 miles south of Nashville, Tennessee. And, a lot of folks are saying the good deals aren't public. And it's like, so it's kind of made our ears are up around, like, why is this deal out there still? Yeah. But we went into it. We liked it. It was an emerging market, Brian, via the network we built over 2 years. We had people in that market who could tell us, yeah, that's a good town. That's a good area. This is a good deal based upon some of the numbers, right? So it kind of alleviated some of our initial concerns that we had. Yep. And so it was one of those mom and pop deals. They weren't professional operators. They had 16 units. It was a Class A. They built it. It was 3 years old. Wow. And their first three priorities were occupancy, and more occupancy. And so they hadn't pushed rents. And so when COVID happened too, they got really freaked out. They were signing people to way below market rents just to keep them in the door. And so that was our opportunity. And so we purchased it. We closed in February of last year. And what we love about it is, without any dollars out of our pocket in CapEx improvements, we've been able to raise revenues, gross rents by about 25% over the first 11 months, right? Nice. So that's a pretty big one for us. And so the cool thing about it was it proved out our business plan, Brian, but more importantly is with our first investors, the folks who kind of gave us that start. They've gotten good returns. We've fulfilled all of our promises. They actually exceeded most of them, and that's built our credibility for raising money on future deals as well down the line.
Yeah, it's definitely a credibility game. And one thing that we have not come full cycle on a deal yet. We're getting close on a couple where we feel we're close to selling. But one of our goals is for the vast majority of the people that exit a deal to reinvest with us in the future, and I think that's one of the metrics that we're going to track as far as, we came full cycle on this deal. We gave, X returns to so many investors, and this percentage of them reinvested with us in a future deal. That's exactly what we're looking for. We're looking for, it's a reputation game, like you say. We're looking for we're looking to build a reputation and the trust so that people keep on coming back, and anyway, that's glad you mentioned that at least. Now you are in Boise, correct?
Yeah, Boise, Idaho.
All right. I'm over in Idaho Falls, just to the east of you, but why Tennessee?
Oh gosh, why not?
Yeah, I mean, there are lots of good reasons, but
we were looking, we looked at Boise, right? A lot of folks look at their home market because they can drive to the properties, things like that. But for us in Boise, we have a lot of California cash coming in here, right? Yeah. And rightfully so. It's a great market. It's a beautiful place to live, great place to raise a family. But, brokers were telling us that for every seller, there were 300 to 500 buyers, right? And most of those were all cash buyers. And so we were seeing cap rates getting compressed over the last 2 years, from around 4 to 4.5, they're down to, 3 to 3.5 now on the cap rates.
I talked to a broker in Boise 2 weeks ago, and there's something that they're selling right now at a 2.7 cap. So we're below 3 caps in Boise for the A class.
Yeah. And so that's what we were looking at, where do we want to go? Mm-hmm. We like Tennessee for a lot of reasons. It's a great market to live in. It's very landlord friendly. And if you look at the dynamics, the long-term demographics, it's growing pretty fast. It's getting a lot of folks in the Northeast that are moving there, right? So if you live in New York and New Jersey, Pennsylvania, that kind of stuff, right? It's big city, it's high taxes, things like that. You can visit Nashville. It's a beautiful place to live. Chattanooga's growing pretty fast. Knoxville, Memphis as well, right? It's a lot of stuff there. Good culture, great places to live, low tax rate, no income tax in the state.
Nice.
If you look at the actual data itself, Brian, U-Haul has rated Tennessee as like the number one destination for moving trucks for at least the last year, if not the last 2 years. Mm-hmm. And that to me shows that people are migrating there as fast as possible. And when COVID happened for us, it also allowed people to say, like, I can still maintain my employment with the Northeast company, but I can live in Tennessee. Mm-hmm. And so I can do that from anywhere in the world now. And that's changed people's things. Like in the past, it's like I had to be near New York to get the great jobs. You don't have to anymore. You can live in Nashville, or you can live in Tullahoma, where we're at, and some of our investments, and still have a really good job and fly in once a quarter, things like that. So I think that for us, the long-term trends for Tennessee are very favorable for us and as an investor.
Yeah, and I think there's a big demographic push that direction. That's what we're seeing in a lot of areas too. Is people are moving from high density to low density, and the high cost of living to low cost of living, and the high tax states to the low tax states. I mean, that's the general trend we're seeing in migration right now. So, and I agree, Tennessee is a place where you can definitely take advantage of that. So yeah, thanks for sharing information on that deal. I hope it continues to go well for you. And then last question for you before we bring on Karoline, what's next for you?
Well, we just closed a deal last month in Clarksville, Tennessee. That was a big one. So we're wrapping that one up, getting everything going. That's good. But our biggest push right now, the next 3 months, is just starting to build additional credibility with brokers and markets that we're looking to invest in. Mm-hmm. And now that we have some deals under our belts and we can kind of show that we've proven we can close, we're getting more traction with brokers. So we're looking to close a deal here in Q1. And move that forward. Don't have the deal under contract yet, but we're still looking pretty fast.
All right. Awesome. Yeah. Best of luck to you. Now we're going to transition. We're going to, I use a catchphrase that my daughter bugs me about, and she's going to edit this part out, and I forget what it was. Shift gears. That's what it was. Now it's time to shift gears. And so Karoline, welcome to the show today.
Thanks so much for having me, Brian. Wait. So are you saying that shift gears is out of style now? Like, I don't understand.
I don't know. I mean, it's something that I always say, and my daughter once pointed out that, like, Dad, you say that way too much, because every time there's a transition, I say we're shifting gears, and now she's going to have to leave it in so everybody understands the conversation from here. But anyway, yeah, shifting gears. I say it a lot, but anyway, Karoline, welcome.
Thanks for having me, Brian.
Absolutely. So do us a favor and tell us a little bit about yourself.
Yeah, so it's funny listening to you guys talk about the Northeasterners moving down south, because I'm of the opposite. Like, I live in New York, but I haven't, quite left here. There are things that keep me here, like my family and friends, but hopefully one day the transition will come. But I'm a teacher based out of New York, and I'm a podcaster. Oh, is that your daughter? The one that's editing these videos?
No, this is not the one that edits the videos. This is my youngest, and her mom's at basketball practice with her brother. So that's what happens when you work at home. So yeah, so you're New York City, and you're looking at potentially doing what everyone else is doing.
I'm a real estate investor part-time, and then I'm like looking to dabbling in coaching. And
all right,
I have, yeah.
What kind of coaching are you doing?
Looking at, like, I'm a big runner, so I was like thinking about doing some kind of fitness or like running thing. And then maybe some like real estate investment stuff.
Awesome. That sounds amazing. Now, one thing that everybody on the show gets asked, and I love this question: what is your big burning why?
Yeah, so my motivation is I actually want to transition out of my W-2 within the next 5 years, and my goal is to start a foundation to help single moms to become entrepreneurs, whether that's real estate investors or not, because I think we do a disservice, right? And we don't educate people that if you are your own boss, that you could have access to a lot more income, but then you also have flexibility with your time and what you do. And I think that there are a lot of single moms that think that they need to work for someone else in order to have a decent income to support for their kid, to provide for their children, but that's really not the case.
Yeah, and my sister's a single mom, and I got a cousin who just reached out to me, also a single mom, and I think they're in that exact scenario where you describe, and it's almost too risky not to have a W-2 when you're a single mother. And I think a lot of the single mothers fall into that trap where it's like, I need that constant paycheck because I've got to provide for my kids and I'm the only one, whereas, a couple or, a person without kids has a little more flexibility. So I very much appreciate that. I think that's going to go very, very well. Yeah, but my cousin, like I said, single mother, reached out to me like 2 days ago asking for, how to invest, investment advice. And she painted the same picture. Like, I never learned how to invest, don't know what I'm doing. What can I do? But I think this would be a very valuable resource. But anyway, now comes the favorite part of the show. Karoline, we got Bernie on the line. What do you want to ask him?
Yeah, so, it's really funny because I feel like both of your stories really parallel mine, in that I have 2 properties, right, that I own, and I used the HELOC to purchase the second property. And then it was like, well, I can't scale this. But so, I was kind of curious because I saw that, Bernie, you raised capital, right? Like, that's like your role within a general partnership. And I was wondering, I mean, you kind of touched on that, but there was something that you had mentioned in regards to you and your wife were like, okay, we have kids and now we want to find, you want to surround yourself with the right people, because I think that's where I struggled, is that I purchased my first investment property in 2016, 2017, and I didn't purchase the second one until 2020. And I think that there's this big gap because I wasn't around the right people and I didn't know, what to look for, or who to speak to, or like, how could I grow? And then that's when someone that I had been following from 2017 who had like scaled her business tremendously. That's when I was like, oh, I need to talk to her and see what she's doing. So how did you go about doing that? Like, you kind of touched on it, but if you could go more in depth in that subject, because I feel like it's not something that everyone really talks about, right?
Yeah, I think it's the natural progress. You read books, you start to look at articles, and then of course you start going to podcasts. And I think mine was like a 6-month journey, Karoline, where I listened to different people who are offering services, networking or coaching, right? And I chose the one that fit my style the best, right? And I think you have a hunch, right? It's like when you meet the person you want to date, you're like, yeah, within the first 5 minutes of date, you're like, yeah, I could go ahead and second date this person or not, right? You kind of know it when you talk to other people. Like, do they have the same style? Or are they pushy? Or are they trying to sell you something so they can kind of get a piece of the pie? Is more of like a pyramid scheme, things like that. And so we went with people who were very genuine and authentic and had the same background as we did. Like they started investing when they had W-2s and got to the point where they got successful, and then they were able to transition out of it. That spoke to us about their style. It wasn't about like, hey, I started from nothing and I raised it, $5 million my first year. It's like, that's not who we are. Mm-hmm. My partner is. And so we found people that fit our style. So I think for you, it's that journey of you kind of have to like just listen and talk and attend a few events here and there and kind of meet the people in person. That was what worked best for us.
Yeah, I actually did something similar. I found the person that matched my style. I'm very analytical, and it was somebody who had a very analytical approach to, investing in apartments, and here's how you do this, here's how you do that. And it really resonated with me. Although since then I've realized that there's a lot of other things, that are important, and a lot of the different programs, whether they want to or not, they're all going to have a slightly different focus. One person's focus might be mindset. One person's focus might be underwriting. One person's focus might be team. But you go to the one, I think what Bernie said is perfect. You go to the one that resonates with you, that matches your personality. And usually that's going to end up being the best fit for you.
Yeah.
Okay. And then I noticed that, you purchased your properties remotely, right? So like what went into that? And you had also mentioned that you have a partner. So, you talked about joining this group and then somehow a partner suddenly shows up. So like, how did that happen? How did that come about? Like, is this guy who's your partner, you guys still partnered together?
Yeah. Mike's my partner. Mike and I actually work at the same company in our W-2s. And so we've been working together for years. And when I decided to go into multifamily, I'd sold, and we're just, chatting. I'm like, yeah, I'm selling my house. Mm-hmm. He's like, why? I'm going, well, we're looking to, invest in apartments. And so he asked, why are you doing this? And so you start to have those conversations over the course of a few months. And then he's like, well, tell me more about it. And so I started to share some podcasts with him. And then, a couple months later, he's like, hey, let's do this together. I'm going to sell my house too. Right. And so it's one of those things where our wives weren't too happy with us, I think, overall. Yeah. But, in general, it worked out pretty well. So I think that, Karoline, when it goes into partnership, it's more of you start talking about it with people, right? And you'll find that people are interested and have the same type of goals and approaches you do. And that kind of helps you to choose your partners as well, versus going out and trying to force it, right? It's not like you can sit there and say, like, I have a deal under contract, I'm going to start talking to people now and raise a couple $100,000 for the deal. If you have that kind of in the pipeline ahead of time and start to build those relationships over time with those people.
Yeah. One thing I'll say, both of you selling your homes, I mean, that's commitment, and sometimes it takes a big act like that to commit. I remember writing the check for a mentorship program. It was actually credit card transaction, but just the thought of putting, I paid $25,000. It was a big enough commitment where, prior to that, I probably could have, dabbled and maybe possibly potentially got a couple of properties here and there. But, something that you said, you both sold your house, that's a big commitment. It's a big signal to yourself that, hey, I'm all in on this one, and your partner's all in with you too. So I really appreciated that.
Yeah, but where did this idea come from to sell your house? Because this is the part I didn't understand. You're just like, oh my God, I want to do real estate. Let me sell my house. Like,
yeah.
I think Forrest Gump said, I'm not a smart man. I think that's kind of my motto in life, in a lot of cases, right? So, no, I think what it was, Karoline, is when we first started this journey, we were like, can we even raise money, right? There was that self-doubt, right? And this limiting beliefs, like, gosh, can we even raise the money from other people because we don't have any deals in our contract and nobody knows who we are. We have no credibility. It's just like, okay, well, at least we have the funds to buy something ourselves, worst case scenario. So, but after doing that, right, we sold our houses and it still took us almost 2 years to close our first deal. So, I mean, we still had some plans ahead of time that by that time we had talked to enough people. We got to the point where like, you know what, we have a network now that we can raise money from. And so that allows us to expand our search out to a little bit higher purchase price than we would have normally done if it was just the two of us.
Yeah. You know, and I had 2 investment properties, single family homes. And when I decided to go into multifamily, you know, we sold them. And that was, you know, it does, you can do this business without having money, but it's a lot easier to start out if you have a little bit of, you know, of money in the bank, you know, so, you know, you're going to have to put in a 1%. Actually, in some markets, it's more than 1% right now, but traditionally about a 1% earnest money deposit on properties, you know, and I think it's best if you're able to do that yourself as opposed to having to ask someone else or potential partner to do it. So freeing up that capital gave him the flexibility. It's the same reason that we sold our investment properties was, you know, to be able to provide that seed money for the company, you know, and the seed money for the real estate that we were going to buy.
So then after you sold your house, where did you go? Like
we rented. We rented it in a place as we wanted to move areas within Boise. We wanted to be closer to the office. You know, with our son coming on the way, I was commuting about 45 minutes each way to work and back. And so I didn't want to commute that long with a new baby. And so we moved closer downtown. And then after we closed our first deal, actually, for close our first deal, we were able to purchase a house for ourselves. So it worked out pretty well overall. But you know, again, I think it goes back to what Brian was saying, right? If you're really into this and you believe in yourself, sometimes you have to make those big risky jumps. You don't always know how deep the water is, and that's okay, right? As long as it's an educated guess in some cases.
Yeah, I think a lot of people, I mean, I have talked to other people who have sold their house for the same reason and downsized to rentals to be able to free up the capital. But, you know, at some point you've got to jump all into this business, you know, and, you know, like I said, you know, him selling the house was a very, you know, present reminder that he's all in, you know, writing that rent check every month, you know, very present reminder that he was all in. So I think that's definitely part of what it takes to be successful.
Yeah. Wow. I don't know how I feel about that.
Yeah, you don't have to sell your house, but yeah, it's, you know, commit, figure out a way to commit. And I think that's the lesson learned.
Yeah. So then since then, how many deals because you said it took 2 years for your first deal, and then how many deals have you guys done since, or how many doors have you closed?
Yeah, it was a 16 unit deal. We closed in February of last year on our first deal, and we got another 32 units that we closed in June of about 3 or 4 months later. And we just closed a 39 unit deal in December, about a month ago. So we've got 87 units now under contract, under our ownership in our portfolio, and we're looking to expand upon that pretty fast.
Congratulations. That's awesome.
Thank you. Yeah,
It's nice growth. Nice.
Yep. So then are you guys self-managing all of these properties, or do you have?
No, we both work. Yeah. So our philosophy is we both work full-time jobs. And so, you know, we are committed to our employer, and we want to do a great job, and, you know, continue to provide value that way to us. So we get third-party on-site manager, or, you know, in-market manager for us. They do that. It's worth the money that they pay. They have all the contacts for maintenance and for all the vendors and things like that. If a toilet breaks at midnight, guess who gets the call? Not us. It's them, right? And so that's the thing. And it's also for us too, is Karoline, we were talking to our investors. They asked the same thing. They're like, "Oh, you're going to invest in Tennessee, so you're going to manage it?" We're like, "Oh no." We're like, "Okay, good," because that's worse than it's like, okay, you're working your full-time job and you're going to manage a property, you know, 2,000 miles away. It didn't make a lot of sense. And so I think for us, it built a credibility that we have a good business model. And I think it goes back to what Mike and I do in our professional world, right? In our W-2s, is we manage large third-party vendors for our company, right? And we do that from sometimes a couple of continents away, right? We've got warehouses in Australia that we manage. We have teams in the Philippines that I manage on a daily basis, right? So we have systems and processes in place that we use in our professional lives that we've applied to our real estate investment process as well. And that's helped us as well to be more successful, I think, than a lot of folks who maybe don't have the same background.
And then for someone that's, working a W-2, right? Like, what is the biggest piece of advice that you can give as far as getting into this business and trying to do multifamily investments while also working the W-2?
Sell your house. I'm just joking. I think there's a couple, right? I think the first thing you have to realize is that there is no perfect deal. And I think a lot of folks do that. It's that paralysis by analysis routine, right? And they're like, gosh, I'm looking at this deal, but it's only a 4 cap, or God, man, it's everybody has the same thing, that they want a 8 cap at $50,000 a door, that they can put $5,000 a door in rehab and refinance it for $90,000, right? We would all love those, but I also would like to find a unicorn, and that's not going to happen. So I think for your purposes, as your new investors, okay, find the deal that you want, be willing to do it. And in a lot of cases too, is don't be selfish about it. And I will tell you, when Mike and I were looking, we couldn't find a deal. We were getting frustrated, but one of our mentors had a deal that he was asking for investors, and Mike and I invested each in it. And on the one hand, we're like, gosh, that takes capital off the table if we find a deal in 3 months. But on the other half, I was like, guess what? We built credibility because now we have something in our portfolio. But it also allowed us to see how the deal works. We're like, oh, now this is how it works. How's the closing process work? After you close, how do they make money, right? How do you look at the books, that kind of stuff? And that was a huge educational thing for us, Karoline. They didn't cost us anything because we made money on the deal, right? And so I think for your purposes is don't sit there and say, I need to be the GP. I need to be the sole owner. It's like, I can go in as an LP. I could do that deal. Or I can go in as a money raiser. We have I'll tell you kind of off note, we have our third deal that we did, we closed last month. Through our network, a guy came to us. He's like, hey, I have nothing under contract. I've got some small units in Phoenix. I'm looking to do it. I don't have any money to put in, but I can raise money for you. And I want to be a GP. That to us made sense, right? We needed somebody to raise a little bit of capital for us. For his purposes now, guess what? Now he's a GP in a deal. He can go out on his resume and say, I'm a GP on 39 units in a great market in Tennessee, right? So I think those are things you can do. You can find value. So as a new investor, don't sit there and look like I have to invest and own it. There are different avenues you can provide value for other people who are also buying it. And maybe it's raising money, maybe it's underwriting the deal, whatever it might be, but you can find value there and to increase your credibility down the line. It doesn't have to be the perfect deal right away.
Absolutely. I agree. And, the 4 of us that came together for the first deal, we ended up forming 4 Oaks Capital, but none of us had GP positions. He mentioned you at least get some credibility by passively investing. And I was one of the guys in our group that had not passively invested before. And I mean, there were a lot of things I didn't know, about the process. It's definitely helpful to see things from the passive investing side if you're able, and it depends on what your finances look like. But I would say if you're able to passively invest first, give that a try. And while you're looking for your first deal, in my position, I had enough money on the sidelines, for, I said I put 100K into our first deal as a passive and as, I guess, a GP, the sponsorship money. That was about everything I had, and looking at the time, I had many offers to do passive investments first. And, I chose to keep the money on the sidelines for our first deal, which I wouldn't go back and remake that decision. But had I a little more money, I would have loved to have invested passively first. Anyway, just piggybacking off of what Bernie said.
Yeah. And Karoline, I think another thing too, is it allows you to get the position of what your customer will actually go through. Right. And I think people miss that a lot of cases. It's, oh, I'm a GP, I'm making the money, whatever it is. Right. But, you have to realize as an LP, you just wired off $50,000 to somebody you may not know very well. Right. If they're not transparent and communicative right away, that makes you feel a little bit nervous sometimes. Right. And so when we did the LP, we're like, there was some oh, this is a great way to do stuff, or here's how we're going to do it differently when we have a deal. And we've taken those lessons learned from the LP side and applied that to how we do GPs. And so I think that's made us better GPs or general partners than we would have been otherwise if we hadn't.
Yeah, that's some sound advice.
Yeah. And Karoline, we got time for one more question. So if you've been saving a silver bullet, now's the time to shoot.
So, you had mentioned that you had your son that came along. Congratulations, by the way.
Yeah.
So then do you feel like, are your plans ultimately to quit your W-2 and just go and do this full time?
For me, no, there's no plans on it right now. I'm very happy. I work in a great company with a great group of people, and I have no intention to leave at all. This is more of around setting up additional income streams, Karoline, to give us options or flexibility down the line. That's all it was really for us. Right. And I think when we talked to, I mean, I'd say this too, is when we talk to our investors, most of our investors are also very successful W-2 earners as well. And I think, the value proposition we add to them is we're giving them additional income streams without the need to go out and sit there and research and manage a manager and worry about property, things like that. So we're all in the same boat. So it makes a symbiotic relationship in terms of how we pitch our investors as well.
Mm-hmm. All right. Well, hey, thank you so much to you two for coming on this show. And we do have to wrap things up. I do have one question for each of you to finish off. And that's the question. Bernie, you get to answer it first. How can listeners learn more about you?
Yeah, you can check out our website. It's www.elementalequityllc.com, or you can email me at bernie@elementalequityllc.com. I'm happy to answer any questions or have a chat to get to know you better.
All right. And we'll have the hyperlink to his website and his email address in the show notes. So if anybody wants to take him up on that offer, all you got to do is tap, swipe, and tap, and the internet will whisk you away. All right. Karoline, you're up next. How can listeners learn more about you?
Yeah, so they could go to firstdealshow.com. I have a podcast. We release episodes every Friday. We talk to investors about their first deal in real estate, whether that was multifamily or just regular single family. They can also find me on LinkedIn, and my name is spelled Karoline with a K, last name Kaon.
All right. And we'll have a link to the podcast and a link to your LinkedIn profile in there as well, and so people can just, check the show notes out and make it easy for them. So once again, very much appreciate your guys' time. And I think this was a great little conversation we had.
Hey, if you like that episode, make sure to subscribe. But more importantly, if you haven't joined our multifamily educational community, the Tribe of Titans, you're missing out. Get 30 days free by clicking the link in the description or go to thetribeoftitans.info, and we'll see you there.